Hey, Bulls and Bears, happy Friday. What is happening? Back with another dose of economic reality. We've got some massive manipulation. We need to talk about the market manipulation. People are asking, hey, what's going on? Why are the markets going up? Well, you know this is 100% manipulated. These markets are not free markets. They are manipulated. And for those that don't know, we're going to, again, uncover the evidence and the facts behind this market manipulation. Why is the stock market going up? First of all, let's take a quick look at the markets. They're going to close here as I'm recording this in just a few minutes. And here's where we ended up. All major indexes today in the green. The Dow Jones up 771, over 2.5%. S&P 500 up 2.8%. NASDAQ up 3.14%. Russell 2000 up 2.7%. So nice little gains in all these major indexes. What is happening? Why? Have any of the things that caused the market panic and sell-off starting in January, have any of those things faded away or been eliminated? No. In fact, everything is worse. So why are markets in the green? Well, there's a couple different things. The manipulation, one. Short covering, two. Big traders, big whales, institutions, they get in there and they buy at the appropriate times and they sell at the appropriate times based on what the buyers and lenders of last resort are doing. And that is the money monster behind the scenes, also known as the Fed. Let's take a look here at the balance sheet of the Fed. And I think you'll see that in the past week or two, there has been an increase in the balance sheet, meaning the Fed is buying the debt. And this allows companies to offload debt and continue to trade their positions. Let's take a look. And we're looking at the balance sheet here. We see in the past, over the past few months, a deceleration. So instead of increasing the balance sheet, there has been a decline. But if we look here since the beginning of June, they actually have increased the purchases of these securities, treasuries, bonds, etc. And a lot of these are loans that are bundled into purchasable assets, meaning the Fed's coming in, they're buying debt from banks, from companies, etc. We also know that they have been caught buying stocks directly. And I think it's a manipulation trying to allow certain people to get in and out of stocks to make the most money possible for those with connections. That's what I think, and that's what I think a lot of you have came to the same conclusion based on all the evidence that we've uncovered here on the channel, the Fed trading desk, the plunge protection team, the Fed buying these securities and assets. So it's no coincidence that the balance sheet has increased over the past few weeks when we've seen more green days pop up here on the chart data. So what does this mean for us? How can we use this information? Well, you can short the market at the appropriate time. After this run up, there will likely be another downtrend in the balance sheet, and that means we're going to see more red days when that starts happening. Remember, it's completely manipulated. But I can tell you in general, I am shorting the market when I see the Fed unwinding the balance sheet and then waiting to see what happens when they start the unwind. You know, right now the balance is going up, meaning they're buying securities, so you're going to see green markets. As a result of that, you're also going to see the 10-year bond yield react accordingly. Let's take a look at that. All right, we'll go ahead and add a chart in here of the 10-year bond. The bond did go up today, but if you look over the past few weeks, it has been decreasing. We got up to about 3.3 at one point, and that made mortgage rates really skyrocket upward. And many people still ask, why are the markets not crashing? Why do we see this up and down trend? And that's because of the manipulation. They don't just want to crash the markets. They're not just going to let mortgage rates skyrocket to 7, 8, 9, 10% as some people have predicted. That's just too much of a drastic move. The market is so over leveraged right now. Prices are so detached from any sort of fundamentals. They have to do this very carefully and very incrementally. And yes, if they pulled away all the support at once, then you would see the market crash. But that's not the way that the operation works. It's a very steady, and slow process. So again, people calling for markets to crash, it's not going to happen. Some people say what's happening in the stock market is a crash. If you look at different channels out there, different YouTube economists, they'll tell you that the markets are crashing. They'll say the housing market's crashing. Housing markets do not crash, and they're not going to be allowed to crash. And in fact, a lot of you waiting for home prices to go lower are going to be very disappointed. Yes, you're going to see some markets have some pricing corrections, but it's not going to be a huge dip or huge buying opportunity as many of you have expected, unless there is a black swan event. That's always possible, where the entire system goes dark, where the entire grid goes down. We're talking about Russia comes in and hacks our power grid, or they hack our financial system. Things like that are always out there, and I'm not saying it's not going to happen or is going to happen. I'm just saying, yeah, that would be a possibility where you could see the plunge and the crash that some people are predicting. So what you want to do, what I think we all want to do or need to do, is integrate the odds of that happening into our preparation, into our financial decisions, into our trading. So what I do here, I try not to have all my money in the markets. I try to have some cash on the side in case something like that does happen, in case a massive buying opportunity comes up. There were people that were 100% in the markets. They thought markets only went up forever. They didn't know how the operation worked behind the scenes. And unfortunately, a lot of those people are not doing so well right now. A lot of these crypto traders, I was reading some articles, a lot of them, trying to think of the right wording to use here. I have to be very careful about how I word things. A lot of those people that were 100% long in digital assets and cryptos, for example, a lot of them are no longer with us on this earth, if you know what I mean. So it's very sad. It's very sad that people just don't pay attention to how these things work. And I'm just a small channel. I wish we could get the word out to more people of how this manipulation works and how you should protect yourself and prepare and use caution and trade, based on this information. And even if you don't trade, I know many of you are not active traders. You may have a retirement account, but you're not buying and selling stocks or options. That's understandable. But it is still good to know these things. That way, the broader economy, you can also make adjustments for the broader economy. And yes, when the stock market goes down, when home prices stop going up, even if they don't drop drastically, even if they stop going up, that's going to have major impacts on the economy. You're going to see rising layoffs. We're going to see a bankruptcy storm, and you're going to start seeing that here, especially towards the second half, the second half's almost here. June's only got a few days left. We're going to be in the second half of the year starting July 1st. The end of the second quarter is just days away, but towards the end of the year, get ready, because fireworks are going to start popping off in the economy. It's not going to be the fun, entertaining type of fireworks. Unless you're set, you're going to sit back on the sidelines eating your popcorn, watching this all unfold. But be very, very careful, because as the economy unwinds, other types of chaos could unwind along with it. And we're talking about dangerous situations that you need to be careful about. All right, so that's what's going on in the markets. Speaking of job losses and layoffs, let's talk about the mortgage industry. What is happening? JP Morgan Chase laying off reportedly several hundred up to 1,000 people in their mortgage division. And this contagion will spread as consumers get further into debt, as people get closer and closer to being maxed out on their credit cards. And I think we all know by now the economy is mostly propped up and based on consumer spending. So continue to see things worsen, and you're going to be prepared accordingly, because you're going to come back here. Please share these videos. Please like, subscribe if you haven't yet. Help this channel stay alive. This type of news is information that a lot of rich people, a lot of wealthy people do not want the everyday person to know about. Thanks for being here, everybody. Talk to you very soon. Keep stacking. Stay prepared. Bye for now.